Hello everyone, welcome to JIB CIB English Medium. My name is Aarti and I hope you all are doing good. So as you know, this is a target series and today we are going to start your next unit, that is unit 19 from your module C. So basically this unit is your an overview of financial management. Now today we are going to start your module C. So basically your module C is all about your theory as well as numericals. Yes, so in this particular unit, we are going to talk about the basics of this module C. So here you will see everything related to your theory part. Yes, and whatever things you are going to cover in module C, we are going to see the brief here. Correct? So let's start today's session. So before we start the theory part, let's talk about few points related to business. Now, if I ask you about like how to start a business, yes, suppose if you want to start a business, you require funds. What is the first thing we want? We want funds. Without funds, can we start any business? No. First, we need to arrange funds. Correct? First, we want money. Then only we can start. We need to purchase goods. Yes, we need to take the property on rent. Yes, we need to appoint employees as well. We need to purchase assets as well. So first thing that we want, that is funds. But how we can arrange these funds? So we have two options. First, suppose you are starting your business, so how you will arrange your funds? Suppose you have some savings. Yes, your FD, your saving account. Yes, your jewelries you will use. So first you will use your savings. Yes, so whenever you are using your own funds, that will be your equity fund. Means when owners are giving any amount to their company, that will be equity fund. Yes, that is equity fund. But suppose you want more extra fund, then what you can do? Just think, you can take bank loan. Yes, you can take bank loan, and this bank loan is known as debt fund. Yes, so basically we have two types of funds: equity, debt. Equity, owner's amount; debt, borrowed amount. What you can say, debt means your borrowed amount. Yes, your borrowed amount. Now there are so many ways through which you can do borrowing. First, you can take bank loan. You can go with debentures. Yes, you can uh, issue bonds. So basically bank loan, when you take from bank, like as you have taken loan from SBI, Axis Bank, ICICI Bank. Yes, debentures, bonds, which when you issue to public, means when you're taking public loan. So that is your debentures, bonds. Okay, so these are the two ways through which you can arrange funds, and then you can start your business. Through this you will purchase machines. Yes, you will purchase your stock. You will generate your income based on this funds. Now there are different ways and the different forms of organization. Correct? So first we have, that is sole proprietorship. Like uh, yes, you can see nearby your shops. Yes, that medical shop, that confectionery shops. Yes, so there is a single person who is manager, who is labor. Yes, who is the owner of that shop. Correct? So that is sole proprietorship. Then next is your partnership firm. When two persons are coming together and they are working for their common goals, that is what partnership firm. Then next you have limited liability partnership. Now limited liability partnership is the combination of company as well as partnership. Here you will see partners are coming. You and your friend both are working, but they have some limited liability. Limited liability means whatever amount they have invested, only they are liable for that much amount. Yes. Then next you have Hindu undivided family. So basically, if you're from Hindu family, Sikh family, Jain family, you can start your HUF. Yes, this is one of the way through which you can do your business. Then E1 is your AOP and BOI, association of persons or body of individuals. Association of persons mean when you are combining like Mr. A, yes, then Reliance Industry, then Tata Company, yes, plus Mr. B. So if these type of person you see and they are coming together for any business or for any working, then that is AOP. But if you talk about body of individuals, means if you see Mr. A, Mr. B, Mr. C only, yes, when individuals are coming like you and me, all are coming together, natural human beings are there, then that is body of individuals. Then next is your company like your Reliance, yes, Tata, all these are your companies. Then cooperative societies. So cooperative societies is like your NGOs, yes, who are doing they're working not for any profit motive, correct? So these are the different forms of business, uh, or you can say organizations. Now coming to the next part, that is financial decisions in a firm. Now, what are the decisions you will take in your organization? First, you will estimate how much capital you want. Yes, suppose here you want to start toy manufacturing. You want to start this business. Yes, you want to start your business. So, what first thing you will see and what first thing you will talk? How much amount we need to invest? Correct? Suppose you decided that 10 lakhs at least we want for starting this manufacturing, this business. So this is your estimating the capital requirement. Now next thing we will talk about deciding the capital structure and composition. Means for starting this toy manufacturing we require 10 lakhs. But how we will arrange this? Yes, suppose now we have understood that 4 lakhs we will use our own saving and 6 lakhs we will borrow. Yes, we will borrow. Correct? 4 lakhs owner will bring and next 4 lakhs owner will bring and 6 lakhs they are going to borrow. So this is the structure they are framing. Then deciding on sources of funds. So sources of funds, like how they can borrow the 6 lakhs. They've identified that they will take from SBI bank loan. Yes, they will take from friends loan, correct? Then they will issue debentures, yes, etc. So means you are identifying the sources. Now your savings, now you have identified you will use your FD, your PF amount, yes, etc. So that is your sources. Next, use of long term funds. Long term funds means, see, long term means which you are going to use for more than 12 months. Yes, suppose you have taken bank loan, correct? Suppose you have taken bank loan for 5 years. Now, from bank you have taken suppose rupees 20 lakhs. Yes, so what are the uses of this 20 lakhs? You will purchase machine, yes, you will purchase equipment, you will acquire land, factory. So these are the sources which you need to check. So this is your use of long-term funds. Then corporate strategy, mergers and acquisition. Like what plans you will make. Yes, for upcoming 6 months, for 6 months, for 12 months. When you're talking about plans, that is your corporate strategy. Then next we will talk about use of short-term funds, working capital management. Basically, when you are starting your toy manufacturing, every day you will manufacture, you will sell your toys, you will purchase the raw material. Yes, so your working, your routine, your operational requirements is your working capital. And what funds you will use for this? You can take overdraft from the bank, Yes, from this overdraft, from this amount, you will purchase raw materials. Yes, you will pay salary. So that is what use of your short term funds. So these are the financial decisions in a firm you need to take. Now, next point is, what are the objectives of financial management? Now, why we are doing this financial management? What actually it will help you in? So first is here to ensure adequate and timely support and supply of funds. Yes, when you are managing, when you are arranging, yes, when you are identifying the sources, your amount that you require, so basically you will get the adequate amount on time. On a timely basis, you will receive the funds. Then you can decide your capital structure also, how much you will borrow, how much you will bring your own funds. Then you can see the compliance with regulations also, like if any income tax regulation is there, a GST regulation is there, income tax regulation is there, you can comply with that particular law as well. Then last one is your to ensure appropriate financial risk management. See, in every business you will identify the risk. Now, how to manage those risks, that is the important part, correct? So before you start your working, you will talk about all these things. So that is your management of your risk also. Sometimes you can see there is a deficit in your business related to your funds. So how you will arrange that time, that is also one of the risks you will cover while talking about objective. Okay, so these are the few objectives. Now, next we are going to talk about fundamental principles of finances. First, we are going to talk about time value of money. Time value of money means whatever amount you are receiving today, that is more valuable than the amount you will receive tomorrow. Yes, like if we talk about Parle-G, this is one of your biscuit. Now, earlier, like in 2010, if you if you would have paid rupees 10, you could have purchased that time 10 biscuits. Yes, 10 biscuits of this Parle-G. But today, when you are giving rupees 10, you are receiving only 5 biscuits. Yes or no? So now you can see, for the same value, for the same amount of value, you are getting small amount. Yes, you are getting small quantity, smaller quantity. Earlier you used to get larger quantity, higher quantity, but now smaller quantity. So that is what time value of money. So a rupee received today is more valuable than a rupee received in the future. Then, next, opportunity cost of money. Now, opportunity cost of money means, suppose you receive four options. Yes, after clearing your college, you got four options. Or let's talk about three options you have received. First job offer you have received from bank, then you got the next offer for government office, then some private job you have got the job offer. Yes, and what are the packages? Let's talk about, in bank you're receiving 15 lakhs per annum, government 10 lakhs per annum, and private suppose 12 lakhs per annum. So now tell me which option you will opt, which is the package you will select. Of course the bank one, है ना, because there only you are receiving the highest amount. And which is the next best alternative for you? Which is the next best option? Yes, that is your private one. Correct? So when we are talking about the next best opportunity, yes, that is your opportunity cost. Your next best opportunity is your opportunity cost. Okay, so it implies that if a person deploys his money on one investment, then he has to give up the opportunity to put this money on some other investments. Suppose, now let's take one more example. Suppose I have rupees 10,000 rupees. Yes, I have the option to invest on stocks or to purchase jewelry. Yes, if I'm purchasing jewelry, means I have actually foregone the option, the return from the stocks. So the amount that I have foregone, which I would have received from the stocks, that is what opportunity cost of money. Correct? Then Last, not last, next is your risk and return. Now, risk, whenever you invest in a stock market, we have the risk, yes, we have the risk. Then, return, how much amount you are receiving. That is what return. If you invest in Reliance Industries, how much amount you will receive? Suppose 10,000. If you are investing in 100 rupees you are earning. So that is your return. Correct? Risk means you can see the you can face the losses. So that is what risk. So these are the few fundamentals about your principles of finance. Now, next, building blocks of modern finance. Now this is important. You have four building blocks of modern finance. Planning, what we need to do in future. Next, decision making. You are examining your point of view. Correct? You are taking decisions. Suppose you have four options A, B, C, D. So when you have four options, which option is best for you? Correct? You will do the cost analysis, you will do the revenue analysis, and then you will select any particular field. So that is what decision making. Then organizing and directing, how to implement the decision that you have selected. Correct? So here you will develop your organization. Here you will develop your departments. Yes, who will lead? Who will be the manager here? That is what directing. And controlling means here you will uh, actually calculate your standards with your actual, and standard means your budgets, whatever decisions, or you can say whatever plans you have made, you will compare with your actual, and whenever you find any deviations you will take corrective action. So these are the four building blocks of modern finance: planning, decision making, organizing, directing, and controlling. Now, next, in this only you have required rate of return. Now, required rate of return means what? As an investor, how much return I want if I'm investing any amount. Suppose this is a Reliance industry. I am investing 1 lakh. I'm investing 1 lakh. How much return I want from this company? How much profit I want from this company? That is what return. First thing what I will ask from this Reliance industry, that is my risk free return. Risk free return means what? Means if I invest this 1 lakh, yes, in FDs, I could have received 6% per annum. Yes, this is the return I can get. So this is the risk-free return because there is no risk. But as I'm investing in this Reliance industry, there are so many risks. Yes, market risk, company risk. So because of taking the risk, I want some advantages. Yes, I want some premium because of this risk. So I want this two things from Reliance industry. That is what required rate of return. The risk free part along with risk premium. Now how you can calculate the risk? With you have standard deviations. Higher the risk, higher the return I want. Yes, higher the risk premium I want. So this is your required rate of return. The firm has to decide on the rate of return it wants on its investment, below which it would not like to invest its money. Yes, total I want above, suppose 6 plus risk premium amount. Below that I will never invest in that company. So that is your required rate of return. Next, you have social responsibility. Now, you must have heard about CSR activities, corporate social responsibilities. Uh, Big companies, they need to comply with this social responsibilities because they are using society's resources. Yes, they are depleting our environment. So they need to provide some benefit. Correct? So they need to comply with some social responsibilities. So basically, we have four categories: environmental, philanthropic, ethical, and economic responsibilities. For example, companies could have arranged blood donation, cataract surgery, medical checkup, yes, implementing child labor laws, or collection recycling of plastic waste, creating food bank, providing night shelter to homeless persons, sport complexes, providing safe drinking water. So these are the some examples which companies can use for social responsibilities. But we have one section, that is section 135. As per that, if companies are complying with CSR, they need to especially check this legal aspect. So the first point is, if company is actually statutorily required to spend. If companies needs to comply with CSR, then they need to give at least 2% of their average net profit. Yes, 2% of average net profit. Now, how to calculate this average net profit? For calculating average net profit, they need to take 3 years previous financial year profit, and with this they will calculate current financial year CSR. Yes, most of the companies in India, they need to comply with this CSR, and as per that, at least 2% of their average net profit. Now, how to calculate average net profit? By taking 3 previous financial year's data to calculate current year CSR amount. Yes, and companies, if they are complying with CSR, they need to disclose the activities, their detail, and where they are complying it. So, as in their board report, also they need to show this. And as per section 135 of the Companies Act, they need to comply with CSR activities. Yes, so with this we have completed your overview of financial management. Now let's talk about and let's solve few questions. Which of the following is a part of financial management decisions? Investment decision, financing decision, dividend decisions, or D, all the above? Tell me. Can you tell me the correct answer? Here, which of the following is a part of financial management decision? Tell me. Financial management decision will be taking investment decision, dividend decision, or financing decision. Tell me, what do you think? Which is the part we need to comply with? See, which of the following is a part of financial management decision? As a financial management decision, we are going to talk about investment decision also, financing decision also, and dividend decisions also. So all of the above. Then next, what is an essential component of organizing and directing in financial management? Tell me. What is an essential component of organizing and directing? Providing the right leadership, ignoring decision making, reducing planning time, avoiding organizational structure. All these three things are talking negative. Yes, and when we are implementing something, we require right leadership. So correct answer is answer A. Next, the function of financial controlling involves what? Continuous monitoring of activities, stopping after decision making, ignoring deviations from the plan, avoiding financial records. So, what is the function of this controlling? Here, you will set your budgets, or you will use a plan with your actuals. You will compare, and if any deviations are there, you will control it. Yes, so the correct answer is continuous monitoring of activities, stopping, ignoring, avoiding. Again, all these three things are negative. What does opportunity cost refer to? The total amount spent on an investment, value of the next best alternative foregone. Answer B is your correct answer. So, with this, we complete your today's unit. But remember, we are starting from 2nd August our new batch. So, if you're planning to give this JIB November this 25, then do join our upcoming batch, because in this you will get your conceptual classes. Yes, from A to Z, we are going to talk about your AFM and remaining three subjects as well. So, online live classes, test series, along with ebooks you will receive. in your upcoming batch, that is officers batch JIB November 25. But if you want to purchase increment box, you can use this because in this we will provide you conceptual class plus crash course plus revision batch. Yes, all your important three batches in just one particular pack. That's why this is a Maha pack. Now in this online live class, mock test, e-books, recorded videos, 4 books, formula sheet, study planner, all these things will be delivered at your home. So you can use this Mahapack as well, or you can go with the officers batch. But remember, if you are enrolling in this, you need to use one coupon code, that is Y895, so that you can receive maximum discount. Along with this, double validity. Yes, this is a coupon code you can use. Now we have one more Mahapack, but in this you will not receive any books. And this is your JIB Mahapack 2.0. In this, again, live classes, mock tests, ebooks, and videos. And don't forget to use Y895. With this only you will receive maximum discount. And this is your Telegram group. You can join my Telegram group for your further discussions, for problem solving, and for your important updates. So with this, now I'm winding up this session. So thank you everyone for joining. Take care and bye bye.